Welcome to the Best U.S. Investors Two Regular Guys show. This is Mark over here, and I am Trent. And today we're going to get in 2 weeks after the election. Things are back to the economy. So we're going to get into economic reports. We're going to get into discussion about a handful of companies, and who knows whatever else we decide to talk about. Maybe Bitcoin a little bit. We'll see about that. But anyways, let's get the party rolling. Hey, Mark, how are
How's
you
it going?
doing?
I'm doing fine. Doing fine.
Yeah,
We're seeing the markets, kind of come down a little bit off the Trump bump or Trump trade. And, we're getting back into the real world of economics. And, because we have a new administration, there's a lot of excitement and maybe some not so much excitement, depending on which side of the world you're on. Um,
right.
he's putting together his cabinet, and it looks to be like they're thinking of you know, cleaning house in some areas and starting to look at our fiscal side in our spending, which I think is needed. Okay, because I think for too long, both sides have spent us into oblivion. We're at 36 trillion in debt, looking to go to 52 if we don't stop, and that's unsustainable. So it's nice that they're going to try it. We'll see how it works, and we'll see how it affects the market. So anyway, that's where we are today,
Yeah.
compared to 2 weeks ago or 3 weeks ago. And we still have some trades out there that are doing well. Crypto is one of them. Okay, it's kind of come up and leveled off a little bit, but it hasn't dumped back down. We've seen, the S&P and the Qs and the Dow kind of go up, kind of hit the plateau and come back down, which you see in momentum trades. So um, today it's all about, this is Tuesday, November 19th. It's all about geopolitical news because overnight, uh, I guess President Biden decided to allow Ukraine to target military sites in Russia using U.S. made long range weapons. And that's a report from RBC Ukraine. And they indicated that a first strike has already occurred. Okay. Whether it is or not, I don't know. These are just what's in the news. Zelensky has appeared to confirm the new authorization from Washington. He says that proof will ultimately emerge on the battlefield. And if you remember last summer, Putin laid out that it would change the very nature of the conflict. And that would mean that NATO countries, the US, European countries, and the US are at war with Russia. Vladimir Dobrov, first deputy head of the Russian Upper House International Affairs Committee, was quoted by TASS News agency as saying, "This is a very big step towards the start of World War III." So pretty serious. So that's why the markets are down. But they're not down like a World War III nuclear down yet. Uh,
Right.
but you know, in my mind, and personally for me, just being a regular guy, why would, if you're a lame duck president, would you commit to doing that, knowing that your time is limited? You know, and so maybe putting thoughts together. And I'd like to hear your thoughts on this. You know, maybe this is it. We had a DoD audit on Friday, Department of Defense. The Pentagon failed its seventh audit in a row, failing to account for more than 824 billion in the 2024 budget. 824 billion they can't account for. Okay, maybe it went to Ukraine. Okay, maybe it went to Ukraine and got kicked back to some people back in the DoD or in, the military-industrial complex. It always seems we have to have a war going on. People seem to get rich off that, and it's certainly not me or you or the regular
Right.
guys. But why isn't this a bigger deal? 824 billion, and I think maybe, you know, that's what we're seeing. With the new administration, what they want to come in and find. Now, what if they can do anything about it? It's going to be a show. We're going to have to sit back and see. Okay, so the Department of Defense Office of Inspector General said auditors could not take, this is really, could not obtain significant appropriate audit evidence to support an opinion of where it went. Okay, so they didn't have enough of a trail. These are auditors, by the way. This is what they do. They had enough of a trail to figure out where it went. Uh, in a statement, the Pentagon Inspector General Robert Storch said there has been little progress since 2005, almost 20 years ago. Although the DoD made some progress in improving financial management during the fiscal year 2024 financial statements audits, many of its identified weaknesses have not improved since 2025, he said. Um, Yeah,
2025. Okay.
2005, sorry,
Yeah.
2005. So uh, it's interesting, where's that money? And then no one seems to care. You think that would be headline news, but we have this all over our government spending, and we're going to probably see a lot of that come out, with this Doge Department of Government Efficiency. And so I'm all for it personally because it's our tax dollars. We should know where they are. We don't need to have praying mantises running on treadmills, in my opinion. We don't need to see the effect of alcohol on the Japanese spearfish. Okay, we just don't need
Right.
these studies. Okay. Anyway, that's me. So yesterday, I believe, the head of America's largest bank, Jamie Dimon, J.P. Morgan, told an audience at the Institute of International Finance that his team is running scenarios in preparation for a global conflict involving nuclear powers. Jamie Dimon told the crowd that war was imminent and nuclear proliferation was a greater existential threat than climate change. So I personally don't think climate change is an existential threat, but I do believe that nuclear proliferation definitely would be. And the fact
Yeah.
that the chairman of the largest bank is telling and preparing his staff for that should, you would think, make more waves than, down 110 on the Dow. But that's me. What do you think
Yeah.
about that?
Well, number one, I think the unaccountable counted accountable of spending, I think that's how I say it, spending that we have seen year over year has to change because we are now at that tipping point where we're losing credibility as a country, as a currency. Um, what I don't understand, I heard an interview with or a speech by the leader of El Salvador. He says, if you have the ability to print money and people use your money as the global currency, then why do you have federal taxes? You just print the money because you're printing the money and you're giving it, the people get it, and then they just give it back. Isn't that, you know, it doesn't make sense. And I think as, a citizen, we don't pay enough attention to the fact that $800 billion plus dollars is unaccountable, unaccounted for in the Department of Defense. Where is that money going? Who's getting that kickback? Yet all over Twitter, I see Nancy Pelosi's trades, and she recently made 1.6 million on a trade recently. I'm like, what are you doing? What do you know that I don't know? And that's where I think we're at that point. If we don't see a change, and if we continue on this route, we've got bigger problems. When it comes to Biden and this whole, oh, it's okay to launch our missiles from Ukraine into Russia, to me, that is, well, I lost, so I'm just going to hand you a bag of shit on inauguration day. Here you go. And it's going to be a big one, and it's going to stink. And I think that to me is a sign of that. It's not a we're doing this for good reasons. There's no good reason to be over
No.
there. Just give up a piece of your country, let
Well,
them have it, move on. You're killing your people off. You're not big enough,
well,
and we need to get out of that.
the only reason we're there is, in my opinion, is to funnel money back to whoever's getting this money, our tax dollars
Right.
that we don't even have an audit trail to. Okay.
Right.
I mean, if that was your company, the SEC would be in there and you'd be shut down. Okay. If
Yeah.
you're a
I mean,
publicly traded. Yeah. If
what's
you're a
going on
private
with it?
company, you would, yeah. If you're a private company, the IRS would be in there going, where's your money? Where
Yeah.
did that go? And you'd be Sam Bankman Fried all over the place.
Right. Right. I mean,
And
SMCI will probably come out with something of that sort. And
yeah,
their auditors said, no, thank you. We're not going to audit you anymore.
yeah,
So
till today.
who's auditing our government? They're
Yeah.
still like, oh, I'm not doing this. Why are
Well,
they still doing it?
it's almost like the inmates guarding the inmates.
Right.
So, we'll see what happens. And I hope we don't get into nuclear war. I hope that Putin and Russia have more sense to know that a new administration's coming and there'll probably be a different tone to the war, not continuing it, but try to end it. But we'll see. I don't know. This is just my opinion as a regular guy sitting here in the middle of the country, watching planes fly over and watching the corn get knocked over. So
Right.
anyway, let's move on to happier stuff. What do you think?
Oh yeah, that'd be great.
Okay, economic news. We're just not about elections anymore and geopolitical, but the economy rolls on. Okay, and the reports keep coming out. And last week we had PPI and CPI, Producer Price Index, and the headline PPI rose 0.2 month over month, and that was in line with 0.2 as expected. So it didn't go down month over month; it's just the same. But September was revised higher from 0.0% to 0.1%. So we had a tick up last month, month over month in inflation. So to me, inflation is not coming down to producers from a month over month. On an annual basis, headline PPI rose 2.4%, and that was higher than the 2.3% expected, was last month's also revised higher from 1.8 to 1.9%. So producer prices are rising. Okay, the inflation is
Yeah.
rising. Okay, it's not 9%, but it's not going down either. Okay, so we keep when you hear Steve Leisman, our favorite CNBC mouthpiece, go out there and talk about inflation's under control. It's not. It's just not going up as much. But go to a store and you know what we're talking about. Producer
Right.
prices end up in consumer prices. Okay, so core producer prices in the United States, which excludes food and energy costs, rose by 0.3% from the previous month in October of 2024, up from 2% increase, 0.2% increase in September. From the previous year, core producer prices rose by 3.1% in October, the most in 4 months, following an upward revised 2.9% increase the prior month, and slightly above forecast of a 3% advance. Okay, so as we all know, we're not idiots. And as we saw in the election, it's about the economy. And people are not feeling good about paying all this money. Their paychecks are not keeping up with their expenditures. They don't have the money to go out and take trips anymore and buy the luxuries. They're trying to just survive. And some of that is we just had yesterday is confirmed by household debt. Okay, how are people living? Total household debt has increased by 147 billion to reach 17.94 trillion, according to the latest quarter report on household credit debt, and credit from the New York Fed. Aggregate delinquency rates edged up from the previous quarter, with 3.5% of outstanding debt in some stage of delinquencies. So when you break it down a little bit, credit card balances increased by 24 billion to hit 1.17 trillion, and auto loan balances saw an $18 billion increase and stood at 1.64 trillion. HELOC balances increased by 7 billion to reach 387 billion. Now, HELOCs when you take out a loan against your house. If you were around in 2007, 2008, that's probably not a good strategy to have, but that's what people are doing to survive. That represents the 10th consecutive quarterly increase since Q1 of 2022. Other balances, which include retail cards and other consumer loans, remained kind of flat with a $2 billion increase, still an increase. Student loan balances grew by 21 billion and now stand at 1.61 trillion. In total, non-housing balances grew by 65 billion, a 1.3% increase from Q2 of 2024. So again, our credit balances are going up. We're spending more. We're putting it on the credit card. Treasury rates in the 10-year yields have gone up, which cause mortgage rates to go up, which cause credit card rates to remain at 30% or wherever they are right now. So it's
Right.
not good for the consumer. So when you say the consumer is resilient, they're resilient because they have credit. When credit runs out, they're going to have issues. And they have issues when delinquency rates go up. Oh, and by the way, they reported that credit card delinquency rates improved with only 8.8% of balances transitioning to a delinquency compared to 9.1 in the previous quarter. So there you go. We're on our way. Early delinquency transitions for auto loans and mortgages worsened, rising by 0.2 and 0.3% respectively. About 126,000 consumers had a bankruptcy notation added to their credit reports this quarter, a small decline from the previous quarter. So when you look at categories flowing into serious delinquencies, this is 90 days or more delinquent. Mortgage debt, okay, in Q3 2023 was 0.72%. In Q3 of 2024, it's 1.08%. Okay, if you look at auto loan debt, 2.53% in 90 days or more delinquency, 2.9% now. Credit card debt is 5.78% Q3 2023, 7.1% now. Okay, so we're seeing that the delinquency rates of 90 days usually get a 90-day, uh, cover before they really start closing in on you, and that's what we're
Right.
seeing. We're seeing the 90 days go up. They give you a little bit of time in case you had a bad month, you can find the money, get back up, but that's not good. We call it from a delinquency to a default when I was in the student loan business, and you were delinquent until you got to 90 days, and then you were in default. It's a big deal.
Wow.
So, any comments on that?
I think it's something that's been building for a while. Um, you know, uh, everybody got everybody did well when they were mailing out checks during the pandemic. Now, all of that is faded, and I think the we should continue to see that this progress even worse, in my opinion, because it's going to take a while to deflate inflation. It's going to take some efforts to do that, and it's not something that's going to happen overnight. And that's why last week I said expect 6 months to a year to see any economic changes, because it's just been piling up for 14 years. If they go ahead and do what they say they're going to do, but you know, uh, do hard things, great things come from it. So I think right now, we as people need to buckle down and say no to stuff and get ourselves out of debt, both from a country and a household standpoint.
Right. I think that people are being forced into taking credit to live, and I got some
Yeah.
stories that just kind of tie all these things together from a regular guy and regular gal point of view. One of them is housing too. Okay, so the Fed back in September lowered rates by 50 basis points. They just lowered another quarter, and ever since they've done that, all the 10-year has done is rise.
Yeah.
Okay, it has no correlation whatsoever with what the Fed does, and they're like scratching their heads. And why isn't this happening? Well, it's because of the bond market, as we've talked about a lot. They're worried
Hmm.
about the debt and the ability to service the debt, and that we're paying $1 trillion just in interest payments, and then every 100 days we add another trillion, to our debt. Okay, so that's what they look at. They could care less about what the Fed is the rate is that they're lending to J.P. Morgan overnight. Okay,
Right.
housing starts in the United States fell by 3.1% to 1.31 million in October 2024, compared with a downwardly revised 1.35 million in September. So they revised September down on housing starts, and we're down again this month. Okay. Housing starts continue to face challenges amidst an increasing inventory of new homes for sale and mortgage rates near 7%. Starts of single family homes plunged 6.9%, equivalent to an annualized rate of 0.97 million. So you think about that. Housing starts are down and our inventories are up. What's that going to do to the price of housing? Okay. Down
And
there, Trent, because
oh yeah.
you live in a resort area. Okay. And the houses aren't moving. Okay.
No.
And the prices are starting to come down probably a little bit too, I would imagine.
Oh yeah.
The other thing that's interesting that while starts for houses were down, starts for houses with 5 units or apartments, they were up by 9.8% to uh, last month. And you think about it, people can't afford houses. Where are they going to live? They got to live in an apartment.
Oh
Okay.
yeah.
And I assume that apartment rent's up too. We can go look into CPIs, and I'm sure that housing is what's causing, a lot of the inflation. And then if you want something that, kind of gives us a leading edge, building permits in the United States fell by 0.6%, okay, to a seasonally adjusted annual rate of 1.41 million in October, and that was below the expectations of 1.343 million. Okay, so building permits are down. That's kind of a leading edge thought uh, for housing. So again, we're seeing credits up, delinquencies up, housing's down. Okay, so just because we had an election doesn't mean the economy has been fixed yet. There's a lot out there, and again, the market is not the economy. Then we talk about a little bit of labor. Nope, go ahead.
let me jump in here. When it comes to housing, remember what month we're in. We're in November. Historically, housing sales are better during summer months because people transition from one school system to another. And most older people aren't buying new homes or moving. So that big, probably purchasing demographic are the households with kids, and they're moving from one state or one city to another. And they typically do that, say, April through August. We're now in this winter months where people are stationary, and you're going to see probably next quarter housing sales decline. You're going to see that probably in winter quarter. If there is a pickup, and if mortgage rates do drop, like people are hoping they would, it would we would start to see that progression upward, most likely next year, starting in May, during the summer months. So
Yeah.
it is a seasonal element, but I think the reality is when you're the average, if you have great credit, the average 30-year mortgage is what, 6.78%, I believe, right now.
Yeah.
That's high for most people when they're paying more on for food and gas, and all that kind of thing. When those things add up, you don't buy a new house, you just stay
No.
put.
And that's a good point. And again, we're going back to what we were talking about was housing starts, starting to build houses. So they would start building houses now to have them ready for that spring, you know, bump, and they're
Yeah,
not doing it. Okay,
right.
because it takes, took me 6 months to build my house. Okay, and that's probably
Yeah,
pretty fast, and so yeah, I mean, the building permits are down. So again, it's kind of a leading edge kind of deal. So yeah.
yeah.
Labor
So
wise, remember the strike uh, back a little while ago on the docks on the East Coast and the golf court and the Gulf shores. Remember they decided to kind of shelve it because they got a pay raise and they put a January 15th deadline. Well, we're only about 2 months away from that deadline, and the union representing the dock workers at the East and Gulf Coast ports walked away from the negotiating table with port employers this week over concerns about automation as the two sides face a mid-January deadline to finalize a deal and prevent the resumption of a strike. So that's not done yet. Okay, so I don't know when inauguration day is, January 20th, so that could happen 5 days before the inauguration. So there's another pile of fun, for the new
right.
administration to take charge with. So we're going to see pretty quickly how efficient and effective these administrations are, this new one, and how
Yeah,
prepared they are for it. They know this is coming because we know this is coming. So
right.
when you think about it, let's talk a little bit about company news because it's interesting. Uh, uh, let's see if I can find. Well, I'll talk about first. There's so much. I'm going to talk about uh, SMCI a little bit. So XAI is Elon Musk's AI startup. Okay. And he
Yeah,
has shifted all AI server orders from Supermicro to Dell. Reports say Dell, already among the largest makers of servers, benefits from this decision, just like its suppliers Inventec and Wistrom. However, losing a multi-billion-dollar business to rivals amid potential delisting at Nasdaq could devastate Supermicro. Okay. Dell is among the largest AI server suppliers, is well positioned to absorb these orders. Wistrom, which produces motherboards for Dell's AI servers and does some assembly tasks, is one of the biggest beneficiaries of this shift. Wistrom is expanding its production capacity to meet the surge in demand, particularly in its three Haishu facilities in Taiwan and its Mexican operations. Wistrom is optimistic about growing AI demand for AI servers and aims for triple-digit annual growth. So I don't know if that's a publicly traded company, but it's called Wistrom. Inventec, another major supplier for Dell, is also reaping the rewards from this order realignment. Inventec has long been involved in AI server production as one of Dell's top three global server assembly partners. So they assemble and then bring it in. This year, the company has primarily supplied machines based on NVIDIA's Hopper processor. Still, the report claims that the company will be ready to mass produce NVIDIA Blackwell-based machines in the first quarter of 2025. The company reported it has spare manufacturing capacity in Mexico, so will likely be able to produce more AI servers for companies formerly served by Supermicro. If Supermicro is delisted, it could face serious financial repercussions, including a sharp decline in stock value. Okay, it went up today, I think 31% because they named an auditor. So take that for what you can. And the immediate repayment of 1.725 billion in convertible notes, potentially severely hurting the company. Consequently, Elon Musk does not want to take any risk in shifting orders of AR servers to other companies. So the continuing saga of AI and these servers and Supermicro continues. And we talked about it in several of the Zoom calls we have. Who would be the beneficiary? And Dell was always the one that came up. And
Oh yeah.
I think Dell's ready for it, and it looks like there's some opportunities maybe at Dell and maybe some of these other suppliers. So,
Yeah.
oh,
I think that that's the obvious company who can absorb that. I don't see Hewlett Packard as being one of the top people to do that, but yeah, this could be incredible for Dell, you know, this shift. So we'll see.
oh, keep informed.
That's right.
Other companies, AP, the Associated Press said Monday that'll begin offering buyouts and layoffs to selected employees, part of a plan to reduce the news outlet staff by 8% and accelerate a transition to a digital first organization. Huh. Um, Kind of back on the SMCI AI deal, NVIDIA. Okay, the hits keep happening for NVIDIA and their Blackwell. Their new Blackwell AI chips have run into issues with overheating servers, creating concerns from customers that they won't have enough time to open new data centers, the information reported Sunday. According to the report, the Blackwell graphics processing units overheat when they are connected together with server racks that are designed to hold up to 72 chips. Sources familiar with the issue said. NVIDIA staffers who have been taking on the issue reportedly said the company has repeatedly asked suppliers to change the design of the racks to avoid overheating problems. Results from the AI chip heavyweight NVIDIA, which reports third quarter earnings tomorrow, which is Wednesday, will be crucial as investors assess whether the AI optimism responsible for much of the market's tech-driven rally can continue. So again, the plot thickens. So we got SMCI. Now we got these overheated Blackwells. And how long this will take to fix, I don't know. But, stay tuned. We'll
Yeah.
see tomorrow. What do you think?
I think, well, first of all, I think SMCI is probably, it won't, a year from now, we won't even talk about it because
I
it'll
don't
be
think
gone.
anyone, and even if they fix it, I don't think anyone's going to go back to them anytime soon once they switch to like Dell.
Yeah. I don't, so I see SMCI as a, uh, I don't think, I think if you're in it, take your profits, in my opinion, and not advice or recommendation, but when your auditor, one of the largest auditors in the world, says no bueno and walks away, that tells you a lot. I think when it comes to NVIDIA, you knew the golden child was going to run into something because they're moving so fast in the last, what, 3 or 4 years, providing, they've become the golden child for GPUs. You knew they were going to run into something. This may be that wall they run into, and it may slow them down a bit. Now, who would step in? I don't see AMD doing it. I don't see Intel doing it. So I think that when it comes from a stock price, you still, if they can meet, if the market likes their earnings on tomorrow, which I thought it was on the 21st, but you're right, it's on the 20th. Um, I would not be surprised if NVIDIA goes higher as a stock. Fundamentally, I'll be interested to see their quarterly earnings year over year and their revenue and their debt spend and their capex and employee costs and stuff like that. So that'll be telling.
Yeah, yeah, I
But
want to see like you track it. Percentage of revenue, revenue percent increase has been coming down quarter to quarter. It's still in the
right.
triple digits, but as an analyst or as an investor, I'd be looking at that, and then I look at the cost side of the financials and say, okay, is the cost of making these things going up and taking the margin down too? So those are two things I'd be looking at if I were an NVIDIA investor.
Yeah.
And again, stocks don't trade on the present information; they trade on the future guidance. So it'll be interesting to see what future guidance is on the video.
Yeah, it will be interesting. So
Yep.
I'm glad you said it was the 20th because I've been saying it's the 21st, and I was like, and now I'm going, oh crap.
Uh, yeah, the
Could you
21st.
imagine?
That's when all that's when all the fun and fireworks will begin on the when market opens on the
Oh,
21st.
that's right. That's right.
So if let's continue on. If you have a ticket on Spirit Airlines, you might want to call Spirit Airlines and make sure you still have a flight, because they filed for bankruptcy protection on Monday after the no frills travel airline in the U.S. struggled with a long run of quarterly losses, failed merger attempts, and looming debt maturities. So we'll see if they can reorganize under bankruptcy and come back a stronger little airline. But again, if you have a flight on there, you might want to call uh, and see if you still have a flight. CareMax plummeted 28% yesterday in pre-market trading on the medical services company filed for Chapter 11 bankruptcy protection in Texas on Sunday. So there's another company that's bankrupt or going that way. Boeing has issued layoff notices for over 400 members of its professional aerospace labor union, the Society of Professional Engineering Employees in Aerospace. These cuts are part of Boeing's plan to reduce its workforce by 10%, or approximately 17,000 jobs in the coming month. CEO Kelly Ortberg cited the need to reset workforce levels to align with the company's current financial reality. Okay, so again, when we look at all these employment reports that come out, and they're all like, oh, we added jobs, we added jobs. Look at all these good jobs. These are engineering jobs, okay, and machinist jobs that'll be gone, and think about that and go into those reports like we do and see that the hiring is part timers, the hiring is government employees, and it gets revised down every single month. So it'll be interesting to see. Again, I'm not trying to be a Debbie Downer, but these I don't write these stories. These are the stories that are out there every day. Okay.
Right.
So if you're a Walmart shareholder, you're doing pretty well today because Walmart's U.S. sales at stores open for at least a year grew 5.3% last quarter compared with the year prior, the company said today. And its profit grew 8.2% last quarter. That's awesome. The economy must be doing really well. Digging down a little bit, though, Walmart raised its financial outlook. A signal expects a strong holiday shopping season. Walmart said it gained market share last quarter, driven primarily from upper income households. Households making more than 100,000 a year accounted for 75% of the company's gains. So you're seeing people of higher status and economic means coming down to Walmart, getting better deals. They're not shopping at the normal stores that they would be shopping. And Walmart's done a good job attracting these people and bringing them in too. Walmart has drawn these higher income customers by investing in its grocery business and using its massive scale to drive down prices. It's also sharpened its assortment of clothing, electronics, home furnishings, and other goods to tailor for these higher income people. So again, good for Walmart. There's always somewhere in the economy where money flows, and Walmart's doing a good job, it appears, of catering to higher income people who are tired of paying higher prices and are probably feeling the credit card delinquency and credit card debt issue that we talked about earlier. What do you
I'd
think
be
about
curious to.
that? You going to Walmart? Are
I'd
you
be.
going to Walmart? I know you're a 100K earner, so are you going to Walmart?
Uh, no, I actually haven't been to a Walmart, and oh, I bought a battery there back in July.
Oh,
But I haven't been to one. Also, I haven't been to Target either. Um, I think where the majority of our shopping is on at the local grocery store and Amazon.
oh.
You know, so yeah, to drive, for us, it's like, those are 30 minutes down the road for us. So Amazon has become our default, where we get toilet paper, paper towels, stuff like that.
So it's not because you're $1 million a year earner and you just haven't been hit by this inflation yet?
No, it's not that at all. It's just
No.
distance.
All right. Well,
It's
maybe next
distance and
quarter
what
we'll
do
see.
I need?
Yeah. I
You
don't like
know?
going to Walmart. It's too busy for me and too many people.
Yeah,
So I'm not a big Walmart shopper either.
yeah.
So
And I live in a tourist area, so when the tourist season is on, Walmart is a zoo. So I try to
It's
avoid
probably
it.
where it's probably where they all go to get their beach chairs and towels that they leave and don't take back with them, right?
Yeah. I
Yeah,
will say
that's what I
they
do.
built just down the road from us, in between two the grocery store, Publix grocery stores. They built a what I would call it like the food Walmart. It's just food. If they could do anything like turn the lights on, it is so dim and dark in there. It's like, didn't you think of that? Whereas I walk into my local grocery store just down the road from it, it's bright, it's exciting, I can see that just turn the
That's
lights
probably
on.
that's probably part of their cost saving. That's why they can offer food cheaper because they don't have
Maybe,
an electric bill.
maybe
Yeah,
that's it. I
yeah.
don't know. Yeah, but no, I haven't
Well,
switched.
let's go see how auto parts are doing. Advanced Auto Parts has announced it'll close 727 stores and four logistics centers as a part of strategy to avoid bankruptcy. This is a Advanced Auto
Wow.
Parts. I love this place. Okay. The decision comes out yet after another disappointing quarter report. Although gross turnover increased by 11%, operating costs also rose, which is what we were talking about. Look at the NVIDIA, financials about operating costs. And total
Yeah.
revenues declined, exacerbating the company's financial woes. So, again, uh, you know, you can get caught up in the momentum like we got caught up, the market did, after the election, but it has to come back to the mean because we're still on shaky financial foundations right now. And all you have to do is look at who's reporting what. There are some good companies out there and they're making money and they don't have to borrow money. But for the majority of a lot of these companies, and the people I know who own companies who aren't public, they're feeling the hurt. And these are
Yeah.
just what we see. So there's some good news out there if you're into crypto and with the new administration coming in being seen as more crypto friendly, there are areas that are doing really well, and one that I follow and one that I own, full disclosure, is MicroStrategy. Okay, it's the largest corporate holder of Bitcoin, and it's run by Michael Saylor. Okay, and Michael Saylor, you can go and just Google him on YouTube, and you can see his whole philosophy. You can interview Michael Saylor, ask him one question, and it'll be a 2 hour interview, and he will go through the entire history of why everything in Bitcoin works and why he likes it. And he's very quite convincing. Every time I see him, I want to go buy more. So
Yeah.
he's an aerospace engineer graduate from MIT. He was in the Air Force, started MicroStrategy. Anyway, you can go look at that up. Uh, but the largest corporate holder of Bitcoin, okay, so announced yesterday it spent 4.6 billion to acquire 51,780 Bitcoin, bringing its total holdings to 331,200 Bitcoin. That's a lot.
That's a
Okay,
lot.
they own over 1%, about 1.3 to 1.5% of the Bitcoin out there. It's only 21 million out there. This move underscores Saylor's commitment to Bitcoin as a fundamental investment asset for the company. So he sees it as an investment asset. He thinks it's capital. It's a digital capital, is what he calls Bitcoin. Positioning it as a competitor to major Wall Street players like BlackRock, which currently holds the largest Bitcoin exchange traded fund, that's IBIT, with
Yeah.
471,329 Bitcoin. The average price MicroStrategy paid for these coins was approximately 49,874, and I think we're running above 93,000 right now. So he's up,
Yeah.
47,000 a coin times 200 no, 331,200. Pretty good. Yeah.
So go ahead.
Okay, so Saylor's belief the company's total Bitcoin investment now amounts to around 16.5 billion, with current holdings valued at nearly 30 billion. This aggressive accumulation strategy has not only boosted MicroStrategy's market presence, but has also significantly influenced the stock performance, and I'm very happy with that. MicroStrategy shares have skyrocketed 656% over the past year, illustrating growing investor confidence in Saylor's vision. MicroStrategy has revealed a strategic plan to raise 42 billion in capital over the next 3 years. The company intends to raise 21 billion through equity offerings, another 21 billion via fixed income securities to bolster its Bitcoin holdings. So this is a way that people who don't want to go through the process of owning Bitcoin, either through ETFs or like through Coinbase or Fidelity, where you don't take custody, have the ability to be exposed to Bitcoin. Now, again, not financial advice. It's just as we see this administration come in, as we see, I think Gary Gensler is going to retire or quit, and we get a more friendly SEC commissioner in there that will provide better guidance to cryptocurrency. And as we have a president that says, don't sell your Bitcoin, and we have a bunch of new congressmen and senators who are Bitcoin friendly and crypto friendly, it has become an asset class. It's called, at least Bitcoin is called, a commodity by the SEC. You're seeing BlackRock, Fidelity, ARK, Kathy Wood. All these companies are buying Bitcoin, along with banks, along with countries, along with states. I think Pennsylvania is looking into buying it. Microsoft's looking into buying it, put in their treasuries. Uh, there are several companies that are trying, who have been contacting Michael Saylor about how do we do this? How do we make our treasuries that way too? Now, with only 21 billion available and probably 4 billion lost so far, okay, and only 1.7 billion or million Bitcoin left to be mined, it becomes a supply and demand issue. Okay, there's
Right.
only so much supply and there's a huge demand. And so, economics 101, I dust off from uh, my Big Ten university diploma, that would tell me prices go up when you have supply and demand. Not always, okay? Markets can change, but here we go. So there's one asset class that has done well and has maintained since the Trump bump. You look like you're ready
One, oh, I'm
to
about to explode. IBIT,
there we go.
BlackRock's iShare, Bitcoin option trading became available today on IBIT. So that is another element that could fuel Bitcoin to go higher, because depending on how market makers hedge that position in option purchasing, it can drive the value of Bitcoin higher. And I think as you see more and more derivative contracts like options on IBIT and some of these other ETFs come about, you're going to see more one volatility, even though Bitcoin's really volatile as it is,
Well,
but you're going to see
MicroStrategy is too.
more, yeah, you're going to see more money come into into Bitcoin, in my opinion. So it'll
I
be
think that
interesting, but
do you think that having that option strategy on there just helps legitimize it as an asset class, that they're allowing
um,
that
I
option strategy?
I think it's another layer of, if you're a company, a publicly traded company, and you get authorization to be able to have options traded against you, it's just another sort of part of the mix that, when you become publicly traded or something of that sort, is part of the mix. Not having it is probably a negative. I've been trying to find eyeball premiums and discounts on iBit, and that's how I came across that today they would be offering it. And I mean, it's up there right now. Now there's no history because it hasn't been, but yeah, I think it definitely gives a legitimizes Bitcoin for what it is. I also think it even more so, it's companies, countries, states looking at this as an alternative for their treasury holdings and using this as, I mean, it is the truthful form of a security you can get. Only so many of them. There is no committee. It's based on mathematics. Nothing more to it.
Can't be
It
hacked.
It can't be hacked or has never been hacked, knock on wood. So there's no manipulation. It is what it is. The value is based on what the market deems it to be
Yeah.
valued at. And that is
And it's
truly it.
and it's visible. You can go look at all the blockchain and see where the money goes. Yeah,
Right.
it's transparent.
Full
It's
transparency.
it's
Yeah.
it's almost pure digital capital. It's exactly what it is. And if you know, I've been sold on it. I went through all of Michael Saylor has gotten me into it. Okay, I own iBit. I bought some of that along with some other when it came out, last spring. So I'm very happy with what's going on there. I think people that I talk to and who are interested in it, I've said, look into this for your 401ks as as a percent of uh, an asset class that you don't have. It's an
Right.
unusual asset class that if you have 1 to 5%, why not? And it's like real estate, it's like energy, it's like any of those asset classes. You should study it, you should understand it.
Yeah.
I would like to, I I believe this me personally, as one regular guy, this is the biggest opportunity at the lowest potential cost to regular people to make a difference in your your wealth, your family wealth going forward. I truly believe that. That's me. Okay. I can be totally wrong. Okay. But for the little bit that it costs to get in, you know, for my family and for my friends, we talk about it all the time. And, you know, I've been in this a long time. And for me, why not 5%? Why not 2% of your portfolio into something like this?
Right.
That's me.
Yeah, I know. I
People
agree with
want
you.
they want 5% in gold. Gold is, a store of value, and you're not going to ever have it in your garage. So I mean, that's
Yeah.
what it is. So
And I think it's in my mind it's still a commodity. So when it comes to allocating portfolio to commodities, you should probably no more than 6% overall of your overall portfolio long-term holdings. But is it going to become a currency? I don't know. But I think
I don't,
what it is, like you always say, it's a store of value. And it is, if you look at the US Treasury as a store of value, we compare that to Bitcoin, to gold, silver. In the end, just I think the winner there is Bitcoin. And so it's a buy and hold. And, if you're 20 some years old or 30 years old or 40, hold on to it till retirement. It could be well worth the effort.
well, the way I look at it is if you have one Bitcoin, and I realize that's a lot. Let's just say you have one, and you bought it today, you paid $93,000, you have a Bitcoin, and you have the ability to just let it sit and wait. And and let's say it goes to 1 million, okay, and which a lot of experts are saying, okay, to
Yeah.
be on, Michael Saylor says going to 13 million over the next 20 years, okay. But if it went to 1 million, now you have 1 million, you have one Bitcoin. You don't have to sell that Bitcoin. You can sell at Satoshi. You can sell off, you know, $1,000 a month or $10,000 a month, and you're still regaining the ability of that Bitcoin to go up and make you money while it's paying you. Okay. So it's not like you have to sell the entire Bitcoin. I think people don't understand that. You can sell down to 11 digits of a Bitcoin if you want, you know.
Right.
So
And that's I think you can buy fractional shares of it. You can buy $10 worth of it,
you absolutely could. Yep.
and if your dollar cost averaging into it at 20, $30 a month over your lifetime, who knows what it'll be worth?
Yeah.
And I think that's the difference. That is the biggest difference between stocks where you have to buy a share. You can't, well, you can on what uh Robinhood, I think you can buy fractional shares. But we don't think in that way. With Bitcoin, you can. So if it's, 90, $100,000, it's you can buy a fractional amount of it. So it doesn't take much to get into it. So if you think about it, if you think about just the whole concept of that, lower income household, scrounge up $10 a month and buy that instead of cigarettes or coffee or whatever, what could that turn into over, their lifetime, somebody's lifetime? It could possibly change their lives, you
Potentially.
know?
And
Yeah. So
I go back to the story again. Months ago, when it was around 65,000, and I was going through the story to tell my friends, you should buy a tenth of a Bitcoin at 6,500. And if it goes to, if it goes to 100,000, you got 10,000. If it goes to 1 million, you have 100,000 off a $6,500 investment.
right.
Okay. Some of them took into that and did it. Some didn't. Now they want to get in again. We're chasing a little bit, but anyway, it's something out there. I'm pretty excited about it. I'm not telling anyone to go do it for sure. It's based on your own. but I think it could be the best chance of, along with AI and the blockchain, of creating some generational wealth, potentially that anything in my lifetime has come around.
Yeah, I would
Let's
agree with
can I
that.
can I look can I look at a chart of Bitcoin? We'll take a look.
Is the
I just
screen,
want to
will the
show you
screen be
something.
big enough?
Yeah, I just want to show you. Oops, what I'm seeing here. It's interesting. It's a daily chart, and here was the election was right here. You can see
Hmm.
we've gone across the nine, we've come up, and then we went sideways. So this is kind of what we call a bull pennant. Okay, and we look for a bull pennant to hit the top, the bottom, the top, the bottom, and break out. And right today, as we speak on this video, which is at 10 to 1 Central Time on the 19th, you can see that Bitcoin has broken above the pennant, and you still see, uh, right now, at least, the upper Bollinger Band moving up. We still see we're all good in the oscillators. So, from a technical point of view, looking at uh, different scenarios, if this breaks, it can go up from this distance to this distance higher. Okay, and some people say, they have from 115 to 130 is where this could go. And again, that's their predictions, not my predictions. But again, using technical analysis, we can look at pattern trading like we're looking at here.
Yeah.
Is it 100%? Not always, but for the most part, it's better than 50% when you pattern trade and you see situations like this. We want to see it come back up, probably come back down, reconfirm, bounce off that, and see if it's going to continue. But so far today, it's looking pretty good for Bitcoin. And let's look at MicroStrategy real quick, since we're on the topic. And you can see MicroStrategy itself is just zooming up along the upper Bollinger Band. Still got rising MACDs. Okay, so these are momentum stocks riding up. Will they go up forever? Nope. Bitcoin, as Trent said, is volatile. Bitcoin follows seasons. So if you're interested in Bitcoin or crypto, go in and watch some of these videos of, Plan B and these guys that have these models made out. And you can see from the beginning of how Bitcoin acts over seasons. And we'll go into, right now we're in as Royal Paul says, we're in a banana zone where the banana's going up, and we'll get to a point where we'll consolidate. We'll get to a point where uh, we'll have a little bit of a bear market, and then we'll go through the halving again. I mean, it's an interesting concept based on numbers, but MicroStrategy is just following right along. And then I'm going to look at the one that BlackRock's ETF. You can see BlackRock, it came up, bounced off of the green line of death that I call it, and we'll see if this momentum can get it to push up further. We're starting to see kind of a wedge shape here too. I could probably draw it in, but we're seeing the same type of wedge shape, and we'll see what happens. But right now, it's been a pretty good trade uh, for people that have been in it. And the last one I want to show, as long as we're on charts here, is Nvidia. Since tomorrow is earnings. You can
Yeah,
see
up to date.
Nvidia's. This is a daily chart, okay, and it came up through the Trump trade, hit resistance on the green line of death, came back down. We're still under the nine today. It's showing a little bit of life on price action. We're still not seeing it in the oscillators yet. A little bit of momentum here in the RSI, but the other two oscillators aren't there yet, and it's just waiting for earnings, And I don't buy before earnings. I usually swing trade out of these at earnings. Looking for the last earnings report right here. So here was the last earnings report. You see what happened. It went down into more of consolidation and then started to rise again. So, be
What
careful. You
is
got any,
what is
you
your
got any,
what is
go ahead.
what's your green line of death at?
It is at 149.
Okay. My calculation today for today was 147 was the high end of it,
Yeah.
and 135 on the low end. So, granted, those
Right.
numbers will change because their
Yep.
implied vol will change tonight. But yeah, it seems to be the resistance level right in that area.
Yep.
So we'll
So we'll see.
see.
it takes some kind of market condition to to propel that momentum past these resistance levels and to maintain them. So we'll see. I mean, we've seen stocks trade above these and then come back down.
Sure.
Let's see where the sell orders are, and this will change the chart a little bit. Nope, sell orders are right at the intermediate resistance level. So
So right
that's
at
where the people are.
149.
Yeah, that's where the sells are. So
Yeah.
they agree, and you can see that investors and people who watch this are using that line the same as I do at this moment. So good luck with NVIDIA. It's a good company. Uh, like Trent says, watch the percent revenue increase. Okay, watch the cost on it. This Blackwell situation is never a good thing when you have news out like that. Okay, and then the SMCI situation. If Elon Musk isn't moving or trying to find capacity elsewhere, I would imagine everybody's trying to find capacity elsewhere.
Yeah. I wouldn't be surprised if he's the first guy, so we'll see.
So
Definitely.
tomorrow's conference call could be interesting.
It could be.
Pop
Yeah,
up some
that
popcorn.
there you go. I got some over here, so maybe we'll do that.
Maybe I'll fly down.
Yeah, jump on the Discord and we'll maybe watch earnings come out
Oh,
after
that's a good
after the
idea.
bell. That
That's a
would be
good
good.
idea. We should do that on the Platinum
Yeah,
Live Discord. Yep.
yeah, that'd be a good idea. Well,
Awesome.
cool.
That's all I got. It was a good call. Appreciate all your input, Trent. It's always fascinating to me.
Yeah, I think, and same to you, Mark. I mean, with both different perspectives on things, and I think that's the great thing is you can do this and have different points of view and still win. So it's a good deal. So with that, we'll wrap it up. From Mark and myself, check us out on www.bestofusinvestors.com. That's www.bestofusinvestors.com. We have all different levels to subscribe to, everything from free to $9.95, $19.95 to $60.95. Mark runs the swing trading side of it, which is part of our platinum channel. You get everything on all the tiers below in the platinum channel, so it's a collective of all of what we offer. And until next Tuesday, have a great week, a great weekend, and always be safe. And most importantly, always live loud. See ya.
And cut.